All right, we are going to review the Robinhood portfolio today, and for today, the portfolio is up 0.25%. I believe the Dow Jones right now is down about 0.80%. It was down 250 points the last time I looked at it, but we are going to review the portfolio. Investing $34,139. Let's quickly take a look at the week stats. I'm up 1%. For the past month, I am down 2%. And in the past 3 months, I am up 17%. For the past year, I am up 8%, $2,627. And my all-time chart shows that I am up 16%. So I don't exactly know if that's beating the Dow Jones. I believe the S&P 500 is still down minus 8%. I could be wrong. But last time I checked, I do believe that I was beating the Dow, or I may have been beating the S&P 500. So the markets are really trying to recover. You can see a V-shaped graph right here when that coronavirus really hit and stuff started going crazy. It seems like March 23rd was the bottom, but this can easily get all the way back down to negative 21%. I was down at one point $6,829. So the markets are very volatile. There's a lot of volatilities in the markets, and you just want to be aware about what's going on with COVID and all the sorts of things that can damage your portfolio. So you can take a look at the bottom of the screen. My buying power represents $4,000, so you guys can already tell that some things were sold off. I'm doing a little bit of restructuring with the portfolio. I'm always trying to get ahead. I'm trying to get advantages with my stocks. I'm just like everybody else. I want to get ahead of the curve. I was looking at Tesla the other day, and Tesla, that stock is just blowing up. I can't believe that stock is over $12,000 now. So congrats to the Tesla longs. I think the shorts have to admit that they're beaten. A lot of Tesla shorts and Tesla longs were going at it for years and years. Years and years ago, and it seems like the Tesla longs are winning. They're finally breaking out. So another good stock I want to talk about is I think it's called Shopify. Let me take a look here. So let's see. Yeah, this stock is really doing good. I remember looking at this stock and it was only like $94 back in the day. So when was this stock $94? Let's see. I can't even tell from the year graph. Yeah, not that long ago. Well, 3 years ago. But this stock has been on a complete tear. So we can definitely see that e-commerce and just buying stuff online, it's extremely popular. It's caught on. Amazon's over $3,000 now, and COVID has changed the world. There's a lot of stuff going on with COVID, and it's changing people's portfolios. It's changing how we do businesses. It's changing how people work, how many people are going to be unemployed, who's essential, this and that. So, I don't want to make this video too long, but let's just quickly review the stocks that I have bought. We can see a Verizon contract there. That's interesting to see. But here are my stocks, guys. One of the things I really want to talk about was Apple. You guys know I've been holding Apple forever. It's now gone. Let's take a look at Apple, the company Apple. Ticker symbol AAPL. It is at $374. So why did I sell? Well, I hinted in the last video that my percentage gain was closing in on 100%, which is just phenomenal. It reached 101%. I took a hard look at it and I got out. I finally sold Apple. So it has happened, guys. Apple is no longer in the portfolio. I like the stock, but sometimes you just got to know when to take the money. And I've held Apple for about 1 year and a half. I think about maybe closer to 2 years, but I think it's 1 year and a half. But when did I sell Apple? Let me take a look so you guys can see. Yeah, I've been getting dividends, a lot of dividends from them, but let me take a look. 375. So my average cost is like 175 or something like that. At first, I bought a little bit more. I really do like this company, but then I'm like, you know what? As soon as I bought it, I instantly sold everything. Like, there's no point in buying Apple this high. I got out of there. I'm out. I made my money. I made 100% gain on Apple. I'm gonna miss the stock. I like the stock, but right now it's just too expensive, and I replaced the stock with Google, which is a very interesting play. So I guess a lot of people are saying, why did you buy Google? Why did you buy Alphabet Class C shares? Well, the reason why I bought Alphabet Class C shares is because it just made sense to me to buy it. The PE ratio was at 29.55. That is the same PE ratio similar to Apple. Apple's PE ratio is around maybe like 30. I think it's actually 29. They're both very similar. So they're both respectively profitable the same way. And I actually believe Google may be a bit undervalued here. It hasn't taken off like an Amazon yet. It's an expensive stock, but I have 5 shares. I'm currently down on my position. I knew I was going to be down when I buy the stock. I'm always down when I buy the stock, but it has been really, the whole market just tanked when the coronavirus broke out, and people started getting really scared. People were trading on emotion. So you can see right here, February 20th, and then a straight line down all the way down to almost $1,000. So Google was definitely undervalued there. I didn't buy there though. Wish I had it, but I replaced it with Google. YouTube. Search engines, revenue, ad revenue. They have their hands in everything, just like Apple. Android. Can I go on with this? I'm trying to just think. A very fortress like balance sheet. This is a company that I like. A good company that I replaced with Apple. I was looking for a tech stock. It's really difficult to find a good tech stock that is that still has potential. Amazon has just flown to the moon. Tesla, you guys already know what's happening there. Texas Instruments is overvalued. All the tech stocks are overvalued because the Nasdaq has been doing so well. But Alphabet Class C shares, I made this move, and I think this is an A+ move because they both have similar PE ratios, and Google is just primed to do a lot of things. They're in cloud, they have YouTube, they're in streaming, the search engine, ad revenues, the fortress balance sheet. They have it all. So I bought 5 shares of Google, and this is now my biggest position. So I actually wanted technology to be my biggest portfolio diversity because it's my most bullish sector. I actually believe that technology is still going to be leading the way, and clearly it is due to the coronavirus and how we do things. A lot of people have to restructure their portfolios to combat COVID. So there's going to be a lot of selling in retail. I think Realty Income, a very well managed business, but the business model is at risk when we're talking about virus lockdowns. So COVID is changing how we do things. Retail is at risk, but people still need to eat. People still need to use electricity. That's my line of thinking going forward with this portfolio. It took a long time to explain why I bought Google there. AbbVie's still here, still rocking it. It did get over $100, which was exciting to see. But my average cost is $65. That's a very decent average cost for a total return of 51%. So normally my rule is normally when a stock gets over a 100% gain, I normally sell out. That's when I sell. When a stock got over 101%. For Apple, it got over 101%. I instantly sold out. I bought a little more because I like the company, but then I'm like, what am I doing? I need to get out of here. So I sold it. I made 101%, and I started looking at some of these other companies. But AbbVie is a very good dividend play, very good pharmaceutical healthcare stock. It's one of the better ones on the market. I like this company, and I remember a lot of people were bearish on this company. It seems like the analysis agreed that it's a buy. But this thing is always changing, guys. Don't look at this and buy just because what they say. Do your research, do your due diligence, and what have you. So AbbVie, I like them. Duke Energy, $80.99. My average cost is $79.64. I always wanted to buy this company when it got below $79. If it did get to $60, I definitely think that was still there. But I think the market is sort of overreacted with Duke Energy. They recently had a dividend increase. It wasn't anything phenomenal, but again, an increase is an increase, and the market overreacted due to Dominion Energy shares tanking. Let's take a look at Dominion Energy. So Dominion Energy is at $74, and this thing really took it to the chin. They sold assets to Berkshire Hathaway, and I think they did have a dividend cut. So you can only imagine how the market just didn't like that. And yeah, here we go. The volatility, people are selling, people are getting out, retirees are getting out. I think it's a good buy if you can catch it around that $68 mark. But Dominion Energy is definitely a lot of volatility going on here. It's trying to rebound a little bit. So maybe there's a price floor here where investors are looking at it and say, okay, it's fallen hard enough. It's down 8%. Let me buy some shares. Down 11% for the past month. But it had an effect on the entire utilities industry, and I thought that the market was undervaluing Duke Energy. They raised their dividend. They're a good company. There's going to be some headwinds going along the way because of COVID, obviously, for a lot of companies. But this was hard to pass up. The dividend yield, I don't think that's correct. I think the dividend yield was at 4.8 when I bought it. And not much to say about them. It's hard to pass up when it's at $79 and you have a 4.8 dividend yield. And this will pay me, I'm correct me if I'm wrong, $72. I'm not sure. I might be wrong on that, but that's still very, very good. And this is a very good utility, one of the better utility stocks on the market. Not the best, but one that pays a very good dividend yield. And again, people are going to have to use electricity. So, I like to be in that space. I want to kind of protect my portfolio from virus lockdowns, and Duke Energy, a good company to me if you can catch it on a discount. Home Depot, not much to say about them. I am still up 61%. It's still rocking it. I totally would have loved to buy more Home Depot with an average cost of $153. I think my dividend yield is over 4% for the average cost that I have. So just a rocking company that seems to have stalled out a little bit. Home Depot hasn't really been growing. The past month is down 1%. The past week is down 0.75%. So it's definitely, peaked as far as if it can break the resistance level. If it can break that level of 259, I definitely see this moving up to around $280. I don't know if it'll do that, but Home Depot is a very good company. Their growth, their dividends, if you can catch them on a discount, definitely a strong buy. I like Home Depot. Let's take a look at Verizon. Right now, Verizon is at $55.14, and I have 100 shares for $55. Looks like I have an options contract there. Maybe, I don't know, what am I doing? Maybe I'm doing some covered calls here. Maybe sell this contract, or 3 contracts, and collect the premium off the contracts. I bought Verizon because I sold out of O. Let's take a look at O. I want to see where O is right now. Sorry, my phone's kind of slow, guys. I don't want to make this video too long. So I sold around, let me see, so 80 share. Yeah, I've been selling like crazy around. It was like $60.90. So I got out of there. Listen, I love I'm gonna miss that monthly dividend. This is a very, very strong company, but the headwinds continue to linger with COVID and virus lockdowns and people getting sick, and it's showing. It's starting to reflect even more when the company is down 8% for the past month. So it looks like I sold at the peak, not quite the peak. It got up to $63, but it was a big chunk of my portfolio. I think this thing was like half of my portfolio, and I had that. You have to ask yourself, do you really want this to be half of your portfolio during virus lockdowns? They have a strong management. I trust their management. However, I don't trust COVID. So there's just no end in sight to the virus. I don't know when there's going to be a vaccine. I look at the news every day. More and more people are getting sick. Texas is locking down. It's, you don't know. You just don't know when this is going to blow over. And having like half of your portfolio in a realty income, I definitely had to make some changes there, but I made a lot of money. You guys saw that I made close to like $2,000. I think when I sold it, I made about $2,100. So, it's just a move that I took a look at, and I'm kind of restructuring the portfolio to balance out COVID, I guess. So oh yeah, and I sold also JP Morgan. So JP Morgan Realty Income, two stocks that are massively affected by virus lockdowns and COVID-19, and who knows what's on the horizon. No one can predict these things, and you guys can see there the little COVID vaccine going on in the picture there. But I bought Verizon because it's less affected by virus lockdowns. Everyone has a cell phone. Everybody's going to be paying paying providers for those cell phones. But what I wanted to say is that even though people are losing their jobs and it's harder to pay for those phones, I do believe that Verizon it's a key play here. It's a key player here because they have a similar dividend yield as O, and I think O is sitting at a 4.5 or maybe like a 4.7 dividend yield, and Verizon is sitting on the same dividend yield at 4.5. So it made sense to me to make that move. Move some money into Verizon and be less exposed to COVID risk. And I do believe Verizon is at a decent price. It's not the best price. I would love to buy this in the 40s, but unfortunately, $55 is what I came up with. I'm doing some little covered calls here, these little contracts. You guys can see I made $24. I don't know when I'm going to sell out. I might sell out when it reaches 56. I don't know. I'm just doing some stuff. And yeah, we'll see where it goes. So that's it for my portfolio, guys. So there are a lot of changes, a lot of changes to the portfolio. I'm taking a defensive approach because I think the market has I wouldn't say it overreacted as far as like the massive rally that we've seen with the V-shaped graph. But like I said, just COVID in general, we just don't know when it's going to be, when it's not going to be a thing anymore. And I want to restructure the portfolio where my portfolio can make money during these times. These times are very stressful. Left and right, you see companies cutting their dividends and retirees just being sad because they depend on that money. They depend on that money to pay their bills. And it's not like the old days anymore where you can leave your money in a savings account and don't have to work. It just doesn't work that way anymore. You have to put your money to work. You have to put your money into a dividend stock like Verizon that'll pay you way better than the bank. The bank will only pay you by 0.00002% when the Verizon will pay you quarterly 4.4%. So I take that easily over a savings account, and looks like Verizon's starting to tank here. That's not good. Should I sell this contract? No, I'm not. I'm just my contracts expire. Hold on, I'm sorry, I'm all over the place. My contract expires 8/21, so I have time to hold it and see what it does. I'm looking at Johnson & Johnson. Obviously, I want to get some more stocks in my portfolio just for the sake of diversification. I was looking at Berkshire Hathaway too. They recently bought Dominion Energy, or they bought Dominion Energy assets. That's Berkshire Hathaway A. I don't want that. Oh yeah, I wanted to mention for Google Alphabet Class C shares. I bought Class C shares because I'm not interested in like the voting and Class A shares. I'm just interested in the company. I'm interested in what the company is producing. The YouTube, Google ads. I just want to focus on that. I'm not really. I trust the management to make the right decision, so I'm not going to be in voting the voters' Class A shares. That's the whole thought process behind that. Berkshire Hathaway, I like this company. It's at a good price. It has underperformed the S&P 500 from what I can tell. It didn't participate in the rally because I believe people were not happy that Buffett didn't put his money to work when the market crashed, or when that was the fastest crash I've ever seen. But it hasn't been performing well. It's down 10% for the past month. But I think this is a very good company. This is a good company that you won't have to pay a expense ratio for, and you get a basket full of stocks that Warren Buffett owns. I think it's hard to go against Warren Buffett. He's been doing this for many years. So he some people think that he's kind of like a fossil now, that he's his time is cutting these shorts because of his age. And Berkshire Hathaway is an interesting place. I'm kind of looking at that, but it's not in my watch list. I want Johnson & Johnson. I just can't buy Johnson & Johnson because when I look at stocks now, obviously I want to buy stocks at a 4 point dividend yield, for a 4 point dividend yield or higher. I don't want to fall into these value traps. It's not like the old days where you can, buy a stock just for the dividend yield. You really have to look at these companies now, because companies are cutting their dividends left and right. So, Johnson and Johnson, I think, is something that I do want to re-add into the portfolio. Not at these prices, maybe about $125. I think that's when I will buy Johnson and Johnson, but we'll see what happens again. And that is it, guys. That's it from my portfolio. Let me know what you guys think about the portfolio. Apple's gone. I replaced it with Google. I like Google going forward, and I'm going to miss Apple a lot, but I had to lock in that 101% gain. I hope everyone has a great trading day, and I'll see you guys next time. Thank you for watching.